Hey everyone, happy Wednesday, November 12th. It's about 9 a.m. on the West Coast, and it's time for another market update. Well, I'm coming to you one day early because I'm going to be traveling, but as I'm sure you guys heard on the news, it seems like our government shutdown is finally coming to an end after setting a record last week. It sounds like the Senate already voted on and passed the resolution. The House will be voting on it tonight, Wednesday, and then if everything goes on schedule, then the president would then be signing it on Friday, which would reopen our government. So I'm not going to get into pluses and minuses for both sides on this, but it's good to know that air traffic controllers and other government positions will start getting paid. Different services will be back open. So let's hope they get that figured out in the long run so we don't have to deal with this anytime in the near future. With that government shutdown coming to an end, like we talked about, there's been a ton of delayed reports. And these reports are what the stock market, the bond market, everything, everybody looking at mortgage rates, that kind of thing, are relying on to get the data to kind of get an idea what the Fed will be doing. So I want to take a quick look at when are we going to get all this backlog data. So starting at the top, CPI. CPI's inflation. If you remember correctly, let's see, a couple of weeks ago now, on October 24th, we got the data for September. The shutdown had already started at that point, but they brought employees back in to get that data out so that way they could do the cost of living adjustment for Social Security. So we got that data. But the next one, October CPI inflation data, we were actually supposed to get tomorrow. That's probably going to get canceled. And then they might just end up combining that data with the November release, which would be on December 10th. So there's a good chance we don't get CPI this month and they combine October, November's numbers. We see that on December 10th. So that we'll have to see what happens there. The next one is non-farm payrolls. That's the BLS jobs report. That's the big one we get every month. That's the big market mover and the one really, we've been missing the most throughout this. And so keep in mind, we missed that September one. It was supposed to be out October 3rd. We didn't get that. Maybe we'll get that around. They already had that data. They already had collected that data before the government shut down. So hopefully we get that data next week. Whereas October numbers, that was supposed to come out a week ago. The workers weren't around to do that one. So it'll probably be about a 3 to 4 week delay. And as it says right here, there might not be a household survey. So remember, there's the one where they do the math and look at some payrolls and come up with their numbers. And then they actually call people on unemployment. And it sounds like because of the delay, the lack of time to do all that stuff, they probably won't do that household survey. And then the next one we'll get is in November. We'll get the November numbers on Friday, December 5th. And probably about a 1 week, maybe we'll get a 1 week delay there. The next one we get GDP. So we haven't seen Q3 advanced numbers yet. That was supposed to be Thursday, October 30th. Probably get that, late November. Next one, PCE inflation. We did not get that on Halloween. Probably get that sometime late November. And then October's numbers, we will get probably towards the end of this month, end of November as well. Ideally, that was at least supposed to come out November 26th. But again, with all these delays, we just not quite sure when we'll get all this data. And then the last one is PPI. That's producer inflation. We hopefully get the October number or September numbers in late November, and then maybe we get the October numbers in early December. So again, pretty big delays on all that data. And really, the important part about that is the Fed meets again December 12th, and we want them to get all those numbers. We want to see the job market weakening, so then the Fed, continues along their path of cutting rates. Next thing we got. So ADP started coming out with these weekly job numbers. And I want to touch on this because last week ADP came out with their October numbers and I think it showed 42,000 jobs created for the month of October. However, when they came out with their weekly numbers today, they said over the last 4 weeks, the average was, about 11,500 job loss per week. So that doesn't really, how did they gain 42,000 October when going back in October, it looks like an average big loss every week. And really what that shows is that, the beginning of the month of October sounds like there was some job growth. And then the end of the month, because I think they collect this data on the 12th. So really the second half of the month looked like it wasn't good at all. So that, bodes well for the next time we get the ADP numbers. Doesn't bode well for the economy, but again, hopefully the Fed's paying attention to this. Hopefully that stuff carries over to the BLS jobs report, the government jobs report, and we see the weakness there. Next thing, so where are we at with conventional rates? So for, according to this lender survey, Mortgage News Daily, last week we were about 6.33. Today we're about 6.34. So hasn't been a lot of movement. Once the government's back open and we get all these reports, there probably is going to be a lot of volatility. There'll probably be a lot of up and down movement depending on what day it is. But right now, it's been pretty flat with the absence of that data. So that at least is good. Volatility is always a little hectic, and no one likes to deal with that. So next thing, like we talked about, the next Fed meeting is December 12th. So that's going to be the big one. Hopefully, we get as much of that data I just went through as possible before that December 12th, or I'm sorry, December 10th meeting. Because again, we want the Fed to see this data to say, hey, okay, inflation is fine, it's slowing, or it's staying where it's at. Jobs market is weakening, GDP is slowing, things like that. Basically, the economy is slowing down, because the more the economy slows down, the more likely it is the Fed will cut rates. Right now, the markets have it at a 65% chance that the Fed will cut their rate on December 12th or December 10th. But keep in mind, that was about 80-85% before their last press conference. So we'll have to keep an eye on there. Hopefully this government reopens like it's supposed to, and we get all that data. If anybody needs anything at all, please don't hesitate to reach out. Otherwise, have a great week, everybody. Thanks a lot.